Welcome and thank you for joining us. Today we're presenting the Montgomery County housing market update for January 2026. The Montgomery County housing market continues to demonstrate resilience and stability. The fundamentals remain strong, with healthy transaction volume and pricing that reflects the county's appeal as a premier location within the Washington, D.C. metropolitan area. Now let's look at the key numbers. The median home price was $600,000. And what's important here is that pricing is consistent across both sale and lease prices, which signals a market in equilibrium. In January, 511 homes were sold, demonstrating continued buyer confidence even at the start of the new year. Additionally, 756 homes are currently under contract, showing a healthy pipeline of pending transactions and sustained momentum. Now, based on these fundamentals, Montgomery County is classified as a balanced to seller's market. Sellers continue to maintain an advantage due to limited inventory. However, buyers now have significantly more negotiation power than they did in previous years. Price trends in Montgomery County reflects a market that is finding its equilibrium after years of rapid appreciation. The data tells a story of stabilization rather than volatility, which offers predictability for both buyers and sellers planning their next move. And here's what the recent price data shows. According to Redfin, the December 2025 median sales price was $640,000, representing 4.4 year-over-year growth. Now, Zillow reports the average home value at about $604,000, showing a slightly 0.6 year-over-year decrease, which reflects market recalibration. Now, while these numbers may seem contradictory at first glance, they actually tell a consistent story. Prices have anchored at sustainable levels, and there is no market crash on the horizon, and we are no longer seeing the unsustainable appreciation rates of recent years. Now, this level of stability creates planning confidence for everyone involved in real estate decisions. Now, one of the most significant shifts in Montgomery County's market is the normalization of sale timelines. Now, homes are no longer selling in just a few days. Now, in January of 2025, homes spent a median of 19 days on the market, reflecting peak competitive urgency. By December 2025, the median increased to 54 days, influenced by seasonal slowdown and broader market normalization. Now, this year, the median days on the market was 31 days, representing a balanced pace that served both buyers and sellers. The 12-day year-over-year increase represents a fundamental shift. You see, buyers now have the luxury of time to conduct thorough inspections, consider financing options, and make informed decisions without the pressure of instant bidding wars. On the other hand, the sellers must focus on proper pricing and professional presentation to stand out in a market where homes no longer sell themselves overnight. Now, supply constraints continue to define Montgomery County's market dynamics. While inventory has grown modestly compared to pandemic-era lows, we are still operating in an environment where available homes are scarce relative to buyers' demand. Now, Montgomery County currently maintains a 2.1 months of inventory, which remains well below the 4-month threshold typically associated with a balanced market. This metric reflects how long it will take to sell all available homes at the current sales pace if no new listings came to the market. Now, with 1,022 active listings, buyers have more choices than during the peak frenzy of 2021 and 2022, but the selection still favors sellers who price and present strategically. So here is what this means. For sellers, you still hold a structural advantage due to limited competition, but that advantage is no longer absolute. Now, for buyers, you now have leverage that didn't exist 2 years ago, including the ability to negotiate repairs and request concessions. Now, the relationship between list prices and final sale prices reveals critical insight about buyer psychology and market realities. In Montgomery County, homes that are priced correctly from day one continue to command premium outcomes. The sell-to-lease ratio in January of 2026 is 101%, up from 100% in January 2025. So on average, homes are selling at or slightly above asking price. The key point is that this only applies to well-priced homes. Overpricing leads to extended time on the market and eventual price reduction. Aggressive pricing no longer tests the market, it punishes sellers. Now, interest rate stability has become one of the most underappreciated factors influencing buyer confidence in 2026. After years of volatility, rates have settled into a predictable range that allows for meaningful financial planning. As of February 5, 2026, Freddie Mac reports the average 30-year fixed mortgage rate at 6.11%. Fannie Mae projects rates hovering around 6% for most of the year, with potentially movement toward 5.5% if economic conditions shift favorably. Now, predictable rates allow buyers to confidently lock in financing without chasing a moving target. For a $600,000 home with a 20% down payment, the difference between 6.11 and 5.5 represent approximately $175 per month in savings. So for buyers, this market represents a dramatic shift from the frenzy of recent years. Buyers now have time to make informed decisions, experience fewer bidding wars, and include a standards contingency once again. So the bottom line for buyers is clarity instead of chaos. Now, sellers still benefit from limited inventory, strong pricing power, and sustained demand driven by Montgomery County schools, locations, and amenities. However, success now requires precise pricing, professional presentation, and a hyperlocal strategy. So countywide statistics can mask dramatic differences between neighborhoods. Some areas experience luxury price spikes, while others saw corrections. Meanwhile, core markets like Bethesda and Silver Spring continue to show steady, sustainable appreciation. Now, this is why neighborhood-level analysis matter. Now, when it comes to headlines, they often focus on extremes. The reality is that a slower market does not mean a weak market, and a balanced market is not a bad market either. Smart strategy consistently beats time and needs. Now, in a market defined by complexity, experienced local guidance makes all the difference. I'm Sergio Garcia. I'm a local realtor here in Maryland, and our approach is education first. We provide a step-by-step clarity, bilingual service in English and Spanish, and hyperlocal market expertise. Now, your next best step starts with a conversation. Connect with us and we'll discuss your goals, review your options, and help you move forward with confidence. Now, most people don't need pressure, they need clarity. Whether you are buying, selling, or simply planning ahead, we're here to provide honest answers and strategic guidance. So to schedule a free, no-obligation consultation to review what this market data or any nearby area's data means for your specific situation, just feel free to reach out. You can call, text, or email us. Let's build a plan that fits your goals, timeline, and financial situation. Now, just to wrap up, this analysis was based on data from Bright MLS, Redfin, Zillow, Freddie Mac, and other trusted sources, and it focuses specifically on Montgomery County, Maryland. So we hope you found this helpful, and if you want a copy of this report, just reach out and we'll send it right over to you. Have a great day.